Okay, all right. It's about that time. Turn up the music. Oh, it's about that time. Hello, guys. Welcome to the episode 52 of our FOREX LIGHT sessions. How you guys doing? How are you doing? Let me know on the chat where you're joining from. Let me know on the chat where you're joining this call from. I'm grateful, I'm happy, I'm privileged, I'm excited to be your host for tonight. And it's going to be an exciting session. It's going to be a session filled with value. All right, so the idea is to, as we do every day, improve our forex skills, get better at making money. Get better at extracting money from this forex space, and it's been an incredible journey so far. All right, now looking at this trade right now, it's in a drawdown, and it's a lesson. It's an opportunity to learn, right? Because yes, I was looking at this trade going up onto this, at least this level, but then it got to this level and it was rejected. It came back down now, and it formed something that is called a double top. At this time, it formed a double top. We got this powerful rejection, and then we have this happening. It went sideways for a bit before it went down. Now I saw this market in this area, and I felt like, oh, good, this is a double top. So most likely, this is looking, this is setting up for a reversal, because double top is a reversal pattern. So it's setting up for the market to price to go down to sell basically. So I had the idea to close my trade at least in a bit of profit, but for one reason or the other, I chose not to, and now I'm in a loss, and I'm not willing to cut my trade in a loss. So two things can happen. It could either go all the way to my stop loss and I lose the trade, or it goes back into profit and I have the opportunity to close my trade in profit. Or at least it could also go up to my TP, but that is not looking very likely, because this is after the double top formation. Now we have a M pattern. After the double top formation, now we have the M pattern. So it's looking very likely that it's going to drop further. But anything can happen. Anything can happen. The markets have closed for the weekend. Next week, we'll see what's gonna happen. But whatever happened, I'm okay. Why? Because even if it goes into a loss, my risk management is strong enough for me not to lose too much, and I'll be able to recover next week with a few wins. I'll be able to recover the loss that would have been experienced with this trade. So I'm not concerned. I'm going to share with you guys a strategy that I'm working on. Yes, it's an incredible one. It's one that is easy to use, and I've been using something similar. But I've learned it a while ago, and I've been using it as well. It's my coach also use a similar strategy. So as it's a familiar one. It's a familiar one. Now it's called the last kiss. Basically, it works on the principle of breakout and retest. It works on the principle of breakout and retest. So that is what I'm working on, and I'm currently doing some back testing to that effect. I'm currently doing some back testing to that effect. So I'm going to do a few back tests for you guys. So you gotta learn the value of, number one, how to do back tests, and number two, the strategy itself. You get a good grasp of the strategy and apply it on your own trading as well when appropriate. So I've done the daily time frame and I had a good result. On the daily time frame, throughout the throughout the gold instruments, I had the result of, let me open it again. Okay. So for the daily time frame, I had 12 wins and 10 lessons and 4 missed trades. So basically 12 wins. That's um that's a good risk reward ratio. That's a good win ratio. That's about, let's say, 60% win ratio, or thereabouts, which is a positive one. So meaning if I apply this to an actual trade, I would have been in profit. So that is a good win ratio. And remember, risk reward ratio also played out. My risk reward ratio was almost, as in, it is not even almost, was always more than one. Meaning, for every trade I take, the amount I win is higher than the amount I would have lost. So for the ones that I eventually lost, the amount I lost were lower than the ones that I eventually won. So overall, my wins are way bigger than my lessons. So that is still another advantage. So in all aspects, the daily time frame backtest was a success. And now I'm on the 4 hour time frame. So far, I've had 8 wins and 9 lessons. And I saw something interesting during the backtest. I realized that at the initial stage, I had I had a very, very consecutive, powerful consecutive run of wins that I was wondering why, like, this strategy is incredible on the 4 hour time frame, because I was just having win after win after win. But all of a sudden, after experiencing that for a while, it just flipped, and it changed to having loss after loss, lesson after lesson, and it's as if the strategy is no longer working. It's as if I didn't even know how to do it anymore. You know, so, but that is the beauty of backtest. So I'm going to persist with the backtest and take it all until the end of the chart. So, so that I have a total view of what this strategy can do, what it is all about. So let's do a quick one, and we'll see how to apply this strategy. Then one thing that I've learned also in my backtest, at the initial stage, I would have taken this as an opportunity. Okay, now that would take me into what this strategy is all about. Basically, all about capturing consolidations, and there's periods in the market that the market was just ranging, moving sideways and consolidating. So those are the periods that this strategy wants to capture. So right now, the market has ranged in this area, and it broke out of this ranging area at this point. So I'll be looking out for a retest, and that was what happened there. A retest happened there. So after the retest, I'll be looking out for a sell candle. This is a sell candle, but to be sure, I would. Okay, this is a sell candle because, as you can see, it's a shooting star. A shooting star is a sell candle. So ideally, I'll be entering this trade based on this candle. Ideally, I should be entering this trade based on this candle. So that's what I'll be doing right away. The thing is, during backtest, you want to avoid being too subjective. You want to just follow standards strictly, standard of what you will do on a live, when if it were a live trade, you know. So you want to follow that as much as possible, so that you can get an accurate result from your back test. My take profits will be the next zone. How do I get the next zone? So what I will use this indicator as my zone. because this is the zone that I drew on my own, but this is quite far away at this time. So I will use this indicator to get me a zone that is closer, and I'm working towards 1 to 2 risk reward ratio minimum. So I have 2.8, which is good. Then I have the zone in this at the spot. So that will be my trade. Then let's play and see what happened. Let's see how this trade played out. Okay, that was a lesson. That was a quick lesson. All right, that was a lesson. So as you can see, so this is what I'm talking about. We are still on the losing streak for this strategy, but that's all right. That is all right. So moving on, let me record that. I'm gonna take. Okay, good. That's that. So moving on to let's move on. So now, two things. I've observed that this kind of a slim ranging opportunities are not solid. They are not solid. So I'm tending towards not no longer taking these short ranges as opportunities. That is where we have just one candle, more or less, ranging. The ideal ones are the ones where you have multiple candles like this one. You know, the price are moving around in the area properly, not just one or two candles. Look at this, touch, 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 touch. Then and something else is I need to have two, at least two touches on either side. On the resistance, I must have two touches. On the support, I must have two touches. That's the minimum standard. So that is how I identify the resistance zone, the trap zone, the ranging zone is identified by two or more touches. So the market is ranged in this area, although I'll find it a bit okay. I have one, two touch here. I have one, two touch here. Okay, I think this is fair enough. This is fair enough for a range. So I've trapped that range into that box. Then this is the breakout from the range. So I'm looking out for a retouch. That is, like, I'm looking out for the price coming back to touch this resistance area before. Okay, good, is coming back. Is it good? That is it. So now it has retested this resistance area, and then I'm looking out for a buy candle. Looking out for a buy candle. This is a buy candle. This is a buy candle, and I've been looking out for a strong buy candle. So based on the fact that this is a buy candle, even though it is still not a buy pattern, so what I can do, I would enter this trade, although it will be quite risky to enter it at this time because it is not a buy candle pattern, but it is a buy candle, a strong one for that matter. So based on the strategy, the strategy says that once I see a strong buy candle, it didn't say that it must be a buy pattern. A buy pattern is a stronger buy candle, yes, but the point is a strong buy candle, and this is what I have here. I have a strong buy candle, so that's why I'm taking this as my signal to enter this trade. My stop loss will be in the middle of the zone, in between the zone support and resistance. My take profit is going to be the next zone. Take profit is going to be the next zone. But for me to get the most value from my trade long term, I would like to have I would like to have my TP to be to be more than to be at least two times what I'm risking. So I can't really see a lot of structure behind. I can't really see a lot of structure behind to set as a zone. So what I would do at this time is to just pick. Okay, I think this is the only condition where I will allow something not up to the one ratio, two risk reward ratio. Because I'm looking at this as my zone. Okay. Oh, I have 0.98. That is not good enough. I need at least one minimum. I can't have anything less than one because anything less than one, it means that I'm risking more to gain less, and that is not a valuable trade for me. Okay, good. So this is okay. So I have 1.07. Okay, good. So I think this is good enough. I can work with this. I can work with this. So this would be my TP one, and then surely I'll look out for more TPs. But that's that. So let's see what happens. Okay, good. That was a lesson. That was a lesson. Now, is it a bad entry? What would I say I learned from this? Is it a bad entry? Probably bad entry because this the second candle is actually the true confirmation of any move, right? Yes, this was a buy candle, but only the second candle can confirm that it's gonna move in that direction. And as you can see, the next candle was not a buy candle, so therefore that the market the price is not really ready to move. Price is not really ready to move. So if I had seen this at the time, I would have been reluctant to join this trade. But it is what it is. That was a lesson. And next time we'll be much more cautious. Anyway, there's really nothing much to be cautious about. So far we are following the strategy. I think we are good enough. There's no need to overcomplicate these things. Yes, with so much with so much loss coming back to back for such a long time, there's tendency to want to make changes and adjust, and but resist the temptation to do that. Stick to the predetermined strategy. Stick to the predetermined instructions. Stick to the predetermined plan for that strategy, so that by the end of your back test, you can have a very clear idea of what is going on, and that by then it will not be too late to make changes. By then it will not be too late to make changes. Now I'm seeing another opportunity, or am I? Am I? Am I? Am I? I was thinking of capturing this area because here we have two support, we have two resistance at the top, and at the bottom we have one, two. Okay, market is moving sideways. So anytime it's moving sideways, you will always find an opportunity to capture, to trap it in an area. Anytime the market is moving sideways, you will always have the opportunity to trap it in an area. Now this was a breakout, but it did not retest. Came back into the zone. So that tells me that it was a fake out and not a real and not a real breakout. It was a fake out. So we don't do fake out. Now it came again and broke out once again, and then it retested. This time it did something close to a real retest because it did not enter the zone. It came close to the boundary, which is good enough. And then it printed a powerful sell candle. So I'm gonna take that as our signal. And then we're gonna enter the trade. Our stop loss, as usual, the middle of the zone, and then our take profit is going to be the next zone. And as we know, my next zone is minimum 1 to 2 risk reward ratio. And this is 1.6, still not good enough. I'm looking at I'm looking at one minimum 1 to 2 risk reward ratio, and that is this next zone. That is even going all the way to 1 to 4. That's fine. Let's go. Let's take our trade. Okay, that was another lesson. You can guys see what I'm talking about. Like it's been like this for the past few trades, lesson after lesson after lesson on this time frame. That's all right. The goal is to print all this. The goal is to run this back test on this chart until the end. So by then we will have I will have a complete data to take a decision on whether to use this strategy on this time frame or not. Like I said, I did it on the daily time frame and it was a good result. But now on the 4 hour time frame, it is not looking very nice at this time. But we still have time. This is just 2018 and we can still run it till this year, till this month. So we still have a lot of data to work with. So that'll be all for now. That'll be all for now for this session. Uh, Thank you guys for joining, and I'm sure you've gotten some value in terms of doing your back test. Because back test is basically the shortcut to mastery, and that is how you can gain confidence in your style of trading. It is the back test that will give you confidence in your strategy, such that any temporary loss, temporary lesson is not going to shake you. It's not going to make you run back to the drawing board, start looking for a new way to trade. No, a back test would have given you enough confidence that okay, yes, there will be lessons with this style, but then overall you will eventually get bigger wins than the lessons, and that will keep you going. That will keep you confident in your trade. You won't get cold fingers because you know that eventually you're going to win. So that'll be all for now, guys. Keep the initiative. You know what you want, go towards it. Every day is an opportunity to take a step closer to your goal. But remember, that also means that every day is an opportunity to go the other direction, to go opposite of your goal. So stay alert, stay aware. Do not allow yourself to fall into the trap of, of thinking it is just once, it is just a day, it is just this time. No, it is never just this time. Continue to keep the initiative, continue to do the right things. Do not allow yourself to make the mistake of taking a break in doing the right thing, you know. And once you build that habit, it gets easier in the future and it gets better for you. Thank you guys for the session. Bye bye.